to Aspire to Retire. I'm your host, Cheryl Nelson. I'm here with Ralph and Tim Short, along with Scott Earhart, all from Welcome Home Financial Partners. Good to be here with you guys again. Always a pleasure.
Good as always.
Good to see you, Cheryl.
All right, guys, we know that life can be full of surprises, right? And today we are talking about preparing for the unexpected, which is something that we all need to be doing in life. And so, gosh, let's get right into that. If you're not prepared, what can a big financial loss look like during retirement?
Well, if you're not prepared, a big financial loss can set you back in retirement and possibly push you back to work if it's big enough. If it affects your accounts, how you're funding your lifestyle, how you're keeping a roof over your head and paying your expenses, a big financial loss that you aren't prepared for will definitely change how you can live, unfortunately. So a lot of what we do when we work with our clientele is help them to understand where their dollars are and how to hedge, for lack of a better term, hedge your bets in case that big loss does happen. Have some dollars for security.
Let me just ask you this question. If you had $500,000 in your bank account and somebody hacked into it and took half of it away and you were going to retire, what would you do? Probably make you think, should I be retiring now? Should I continue to work? Or you're just upset, you don't know what to do?
Well, I would want the money back.
Well, yeah.
That's what I would try to do, is get the money back.
But how long are you willing to wait to get it back?
Oh no, how long does it take?
It takes a pretty good while if you lose half your money to get it back up to where it was.
Well, but if somebody hacked into it, couldn't you just get it back from the bank?
Well, if that's the case, but we're talking about the market. If you got your money in the market, obviously you're not going to be able to get that immediately back. But that's one of the bigger things is it's not just about being in retirement and losing your money. It's about getting close to retirement and having a big financial loss. Because if you're planning on retiring at whatever age, let's just say 60 years old, and you're 57 and then all of a sudden you lose half of your money, are you still going to be able to retire? The last thing you want to do is work for 10 years thinking, hey, 60 I'm leaving, and next thing you know, you lost half of your money, and now it's like, okay, well, maybe I have to wait till 65, maybe I have to wait till 70.
Yes.
Exactly.
But that's what happened in 2008 to
I
a lot of people.
remember that, the recession. So if that were to happen again, how do you prevent yourself from losing that much money?
Well, that's what we sit down with people and talk about. There's different strategies and tools that you can use to prevent yourself from a big financial loss. So that's why it's imperative when you get closer to retirement, you got to take a look at those things. When you're 20 years old, you're 30 years old, you've got all your working years ahead of you. You can ride the roller coaster known as the stock market, right? So if you lost 30, 50%, it's never fun. Nobody ever wants to come into our office and say, hey, I want to lose money. That's not what people want to do.
If they did, there's something wrong with them.
Yeah, could be. But when you're at the age and stage of getting close to retirement, you got to throttle that risk back. And that's what we help people focus in on is, hey, based off your numbers, based off your income and your expenses, where do you need to put your assets to make sure that you can retire the way that you want and when you want to?
And the other thing is, what happens if something like that does happen? Do you have to go back to work? Did you retire to go back to work later down the road? Maybe you retired and started a part-time job or doing something that you wanted to do. That's a different story than having to go back to work.
It changes the whole outlook of your life and what you planned for.
That's exactly right.
And nobody wants to do that.
I don't believe anybody at this table, because these guys are going to be playing golf to all eternity, while some of us still continue to work. So, but anyway,
what are you saying there?
So anyway, that's kind of where we are. But there are things that you need to take a look at, because you got to be prepared, because nobody knows the future here.
No, I wish we did. And we talk about that crystal ball a lot. And so with so many Americans entering retirement, what are some of the pitfalls that you're seeing? I mean, obviously not being prepared, but what are some specifics?
Well, piggybacking off what we just discussed, I see a lot of people that are 1-2 years away from retirement that are simply too exposed to the market, have too much risk with their dollars. And if the recession does happen, or if a blip happens, if they don't time it right, they're not going to be able to retire as they want to.
But the other thing I would say to people is this: there's so many things out there that people listen to on TV or internet. You know, what's the Fed going to do? What's inflation going to do? What's the tax rates going to be? We don't know what it's going to be. You just have to be understanding that what we tell people in our roadmap process is not written in stone, because things will change. Tax laws change, What it's going to be like, we don't know. What is Social Security going to be like? We don't know. It's just those things. You have to worry about things you got control over, and that's where you put your money, how much money you need to take out, and what to do with it at that point in time.
And I think that's why the road mapping process is so important, because it is the first step for our clients taking control. Again, as Ralph said, we can't tell you what the future is going to hold, but we can help you get a handle and get an understanding and begin to control your own finances in your retirement.
Yeah, and Scott brought up an important term that a lot of people try to do is time. People try to time the market.
Yes.
You can't time the market, right? We're always told that you buy low and you sell high. Well, what's the high and what's the low, right? We can't do the timing. So it's not about when you time the market, it's about the time in the market. So that's why you make sure you place money in the market, that what we like to call the patient money, right? That money is going to be in the market, it's going to go up and down. But the impatient money, the money you don't want to lose, you don't leave in the market, because you can't time the market. We don't know the lows or the highs. So we've got to make sure that we structure this plan accordingly based off your needs.
But the other thing people need to understand, there are surveys out there that 50% of the people that are retiring, they're not confident that they're going to have enough money to survive. And of those group, 70% of the people that has a financial advisor, they're a little bit more confident that they'll be okay because they have a plan. They have an understanding of what that plan is going to look like.
You need that plan.
Correct.
And I'm glad you guys are talking about timing too, because I want to get to this about Social Security. How do you know at what age do you start drawing that money?
Well, it's going to be based off each individual, right?
Yeah.
So when we go through the roadmap process, we do some maximization reports for Social Security. So it kind of gives you a really good insight and a really good tool to use. But there's so many different strategies when it comes to taking Social Security. A lot of people, we meet with a lot of people now that, hey, once I turn 62, I paid into it for so long, I'm going to go ahead and take it. Well, if you're still working, you're going to pay a lot of that back. So what's the point of locking yourself into a lower benefit, paying the majority of the money back? There's no sense in doing that. Yes, we're not guaranteed tomorrow, but still, if you live to 90 or 100 years old, you know, you're going to miss out on a lot of benefit. So there's so many different strategies that you can use, but that's what we sit down and talk to folks about.
Absolutely. And I think the one thing that we need to drive home is that there is not an answer in a box for everybody. It's not the same for everybody. That's why you get a tailored plan, a personalized plan for you to know when it is best for you as an individual to activate Social Security.
Yeah, now is the perfect time to talk about the special offer, because people need to call to learn what's best for them.
Yeah. So for the first 10 callers who have saved $250,000 or more, we'd like for them to call 833-897-4845. And we personally like to invite them into the office where we'll create their very own retirement plan. And Cheryl, the best part is we'll do it on a complimentary basis.
Complimentary, we always love that word. So yes, we need to take a brief break, but we are going to open up those phone lines, as Tim said. So if you'd like some personal advice about retirement planning and more, that number one more time, 833-897-4845. Also, that QR code on the bottom of the screen, go ahead and scan that with your cell phone. If you don't want to call, you can do that as well and schedule your appointment. Coming up next, we will discuss how to get the most value out of your money. You don't want to miss it.
Imagine the future you've been wanting all along. A world where your retirement income is covered and you don't have to worry. Your financial assets are protected, and you have an experienced team fighting every day to grow your assets. Imagine a company creating tax strategies and legacy plans to make sure your loved ones are protected no matter what happens. At Welcome Home Financial Partners, we're an experienced financial team with the right professional licenses and an unbreakable commitment to making our clients feel like family. Here you'll find determined, friendly faces in a world filled with obstacles and problems. We help plan your retirement income to ensure you won't run out of money in retirement. We build in protection to make sure your assets are covered on all sides. We focus on growing your wealth to combat inflation and rising cost of living. And we design tax strategies to help you avoid paying back what you shouldn't while protecting the people you love. Our team never stops fighting for you. With an unparalleled work ethic, we work hard because we know your future depends on it. We're proud to help you choose the life you want to live in retirement. Welcome to your financial future. We're so glad you're here.
Welcome back to Aspire to Retire. I hear some phones ringing in the background. Always good to get those viewers calling in. And speaking of that, what can our viewers expect by being one of those first 10 callers from today's show?
Well, the first 10 callers, what they will receive is a package in the mail from us. Have a little bit more information about the company and ourselves. Also give them a little bit of homework to do as far as the first meeting is concerned. So what they'll expect from us when they come into the office is to get to know us. We'll get to know them. Like Scott said in the past, is we won't do a whole lot of talking. We're going to do a lot of listening. So that's the issue at hand, is we've got to make sure we listen to what they want to do, what they need to do in order to create this plan.
You guys are the perfect professionals to speak with about that. I will say that. You make us feel like we are part of the family. I feel like part of the family at this point.
Good,
You absolutely are.
Yeah. Oh, thanks. See, if we had some beverages in here, we could all cheers. Did I just give away the secret? All right, let's go back to what we were talking about here and preparing for the unexpected. Market volatility can go like a roller coaster. So how do we go about conquering the market? This is what scares me about the stock market.
Well, what I would say is for most people, they need to understand the market goes up, the market goes down. There's no way that you can control that. But the thing that people need to understand, it's not about conquering the market. Okay, it's about using the market to accomplish your goals.
Okay.
Okay, and what I would also tell people is this: are you trying to beat a benchmark with your investments, or are you trying to accomplish your goals? And most people need to understand that that is what your purpose should be, is accomplishing your goals, whatever it's going to be. Give you an example. For a lot of people, they need to understand that S&P over the last 20 years has averaged about 7.5%. Okay. But for the average investor, what have they done? Do you realize it's only about 1.9%?
What?
So what's the difference?
That's horrible.
That's the difference. It's because they don't have anybody to hold their hands and explain to them what's going on. And the other thing is, they always do the exact opposite of what you should be doing, because you've always heard buy high and sell low, right? No, it's not that way. It's buy low and sell high. But what does the average investor do? They get into the situation, listen to the TV, radio, and their coworkers. Oh, we're way up here. We're making so much money.
Yes.
Then they start getting in, and when they get in, the market tanks. And then what do? They get scared, and then they sell.
Oh my.
So that's the thing that you need to understand.
And I think that's a perfect example when we talk about what the S&P has done over 20 years and what average investors have realized. There's a big difference between Wall Street and Main Street.
Correct.
We're here to work with people on Main Street,
Aw,
real
I like
people
that.
are here. We're going to help you achieve your goals. We're not here to conquer the market. Nobody's here buying, selling, trading, doing all sorts of crazy things that you see in movies. What we're here.
Bitcoin? Why not Bitcoin?
You know, speaking of Bitcoin, one of my friends tried to get me in on that years ago.
Yeah.
Is that, what are your thoughts?
That's something
you don't want to
we'll
talk about
about.
Bitcoin?
Well,
I think we need a whole show on Bitcoin.
You want to talk about derailing a show? That'll get it done.
So I have a rule: is as soon as you've heard of something, it's already gone, right? So
Yes.
back to what Ralph's talking about
Yeah.
is, if you're speaking to your coworker and, hey, we bought into this stock and it's doing fantastic. Well, now you're getting into it because they've done so well. Well, next thing you know, now it's going down. So by the time you hear of it, it's already too late. So back to what Scott's saying is, you need to just accomplish your goals. Don't worry about chasing the percentages. Don't worry about chasing that magic number. Whatever you want to do for retirement, whatever you need to get those retirement dreams done, that's what you need to focus in on. And that's what we can help you out with.
Absolutely. I don't think it's about conquering the markets. It's about conquering retirement. And that's what we're here to help
I
with.
feel like, though, the goal would be to make as much money as possible for retirement.
Well, it can be, but the biggest issue that you have with that is everybody's emotional. And that's where emotional investing comes in, is once the market starts going down a little bit, if let's say you got down to 10%, people start selling. Well, guess what? It could come back within a couple of months. So you never know what the market's going to do. You never have, we never will, right? So that's why we sit down with people and we focus in on what they need and what they want, and let's figure out a good strategy and strategies to make those dreams happen.
Yeah, because I think I would just bow out otherwise, because I need somebody to hold my hand to walk me through this, because if I saw the stock market going like this, I'd be doing all kinds of bad stuff, I think, with my money. And so, yeah, speaking of that, how do you get the most value out of your money? How do you make sure that you do that? Obviously, hold your hand, have you walk us through it. But what else can you do? And try not to get emotional?
Yeah, that would be the first thing that I would do. It's not getting too emotional.
You're talking to the wrong person.
But at the same time, you need to understand what your goals are. You need to understand what you would need to live off of. You need to understand how the taxes are going to help or hinder you, more than likely, in planning for your retirement. So like we tell people, it's all about what you are trying to accomplish. It's all about what your goals are. It's not about your neighbors. It's not about your coworkers. It's all about you. So what do you want? Do you realize that most people don't have any idea of what they want?
Oh.
They just start thinking about, I want this big pot of money. Well, that's fine, but what are you going to do with it? This big pot of money is now there. What are you going to do with it?
Spend it.
Yeah, but how's the best way to do it? And that's what we need to sit down and talk to people about.
Right.
Yeah.
I know. I easily say, spend it. Ooh, I could do this, this.
Well, the issue too is most people haven't even looked at their budget, and that's a big problem. Is if you've saved $1 million, but your expenses are $8,000 a month, how long is that $1 million going to last you? Especially if it's in the market and the market drops. So
Right.
that's why we sit down with folks once again, and we sit down and we create these strategies for them.
Yeah, well, what do you say though if somebody says, I don't budget because it stresses me out to look at it?
Well, these are hard conversations that you have to have, but if you're going to bury your head in the sand and you don't take action, your retirement probably is not going to be where you want it to be, and that's just what it is.
So are you listening to our conferences and our conference tables when we have these meetings and stuff? Because a lot of clients will say that, I don't want to look at it.
Oh, I'm a fly on the wall.
I'm afraid of all this.
Yes.
And one of the biggest things that why we stress the budget so much is retirement's a long time. I mean, retirement can be 20, 25, 30 years. If you don't have a grasp on what you're spending, it's going to make life pretty difficult in those later years.
Right, because then you get worried about running out of money and not having money for health care and all those problems. And you mentioned procrastinators, Ralph, and there are a lot of people who procrastinate when it comes to retirement. What can happen to those procrastinators, and what is your advice to them to say, hey, let's jump on the bandwagon now and let's start preparing?
Well, we see it all the time. I mean, there's probably 80% of the people we talk to anymore are now procrastinating. And that just goes to, hey, I'm too busy. Hey, I just don't want to take time to do this because I'm too busy planning my vacation in the summer.
Yeah.
It's just not something that people want to do. It's just not fun.
It's not.
But if you're fortunate enough to retire at 50, 55, or 60 years old, because more people now, most of us want to retire younger than being older.
Right.
So if you're going to live, Scott said 20 or 30 years, but maybe some of us want to live 40 or 50 years in retirement, you've got to plan for that. So this is not just fly by the seat of your pants. That's going to take a process to, hey, I've got to make sure this is in line, this is in line, this is in line. Because we've talked about before, life is going to throw you curveballs. The unexpected is to be expected. We just don't know what it's going to be. So we've got to make sure that if we're in retirement for 40 or 50 years, our money's going to be there. I know some people can spend the money, but when is that last final day going to be? We've got to make sure we've got that.
My goodness, you're making it all serious now. And it is a serious topic, but you're really putting it all out there going, hey guys, you really got to start thinking about this.
Yeah, because it is. It's something that you have to focus in on. And sometimes it's not the most fun, but once we get through the process, we do make it enjoyable.
Yeah, we do. I know. We have fun here. We have some laughs, and you also have special offers.
We do. So the first 10 callers who have saved $250,000 or more, we'd like for them to call the number you see on the screen, 833-897-4845. We'd like to personally invite you into the office where we'll sit down with you and create that very own retirement plan. Cheryl, the best part is we'll do it on a complimentary basis.
All right, and that QR code there at the bottom, don't forget to scan that with your phone as well. If you don't want to call, you can scan that and schedule that appointment too. It is time for a commercial break, guys, but keep those questions coming. Take advantage of our professionals and call for advice now or scan that code. Again, that number is 833-897-4845. Coming up next, we will feature some of your burning questions. Stay with us.
It was the longest-running bull market in history. Everything was looking up. While inverted yield curves pointed to a recession, the market kept going. And then, if you're planning to retire soon, that could spell bad news for your returns. Our team can help you better withstand the bear market. Now more than ever, you need a financial professional to stand with you. Visit our website to learn more about our services. You can call or email our office to schedule your complimentary consultation today.
Welcome back to Aspire to Retire. It is our favorite part of the show. Time to feature some of your questions. We're going to start with Debbie in Atlee. Debbie says, we've seen so much turmoil with banks and in Washington lately. I'm nervous about the security of my money. What advice would you have for someone with my type of fears? I understand you, Debbie.
Well, Debbie, first and foremost, your fears are justified, and nobody should tell you any differently. No talking head on television, on the radio, on the internet should tell you that you don't have a right to that fear. And what I would say is let's control what we can control. And that's sitting down, like we talked about earlier, developing a plan, making sure you have your money in diversified buckets. So if the worst does happen to a bank or something kooky happens in Washington, you have other income streams, other assets that you can access to ensure that you can live the lifestyle you want to lead.
All right, good answer. Next up is Ruby in South Chesterfield. Ruby says, I'm unsure if my retirement accounts are ready for anything, but my advisor tells me not to worry. What would you guys say?
Well, what I would say, number one, I don't have enough information about what your situation is to tell you anything other than you need to sit down with somebody, get a second opinion from people like us, and then we will be able to give you a second opinion, some different tweaks that you might make in your situation. You might be perfectly fine, but more than likely there's things that you can do because your present advisor probably just wants you to maintain that relationship for the fees that he's getting off of you without maybe taking your considerations into
It's like
account.
reading a children's book. Oh, don't worry, it'll be fine. You'll be fine.
But how do you know? I mean, unless you have another opinion,
don't
unless
know.
you understand what it is that you've got. And most people, I would say, do not understand what they have in their plans.
Right.
Yeah,
Oh yeah,
it's-
we
yeah.
see it all the time. A lot of people come in and they'll throw their statements on the table and say, can you explain this to me? Because I've been with this person for 10 years and I still don't understand this.
That's so not good. That's kind of how I feel when I look at statements too. I'm going, why am I losing money every month? What's happening here? Don't like that. Okay. Next up, Michelle from Ruther Glen. Michelle says, I am very scared of the costs of long-term health care. Yeah, me too. What can I do to make sure that I can get the care that I need? Ooh, that is such a good question. It's a scary question. It scares me and it probably scares a lot of people.
Oh yeah, well there's a lot of things out there right now that you can use. A lot of people have taken a look at long-term care insurance alone in the past. A lot of companies now don't even sell long-term care insurance. A lot of people that have standalone long-term care insurance right now can't afford the premiums increasing. There are different things that you can use to help you support pay for long-term care, but that's, once again, back to the procrastination. The longer you wait, the more expensive it's going to get. That's why, if that's a major concern of yours, which it should be, sit down with us. We can help you formulate a plan for that.
Well, what age are you supposed to get long-term care? Or what age is it best to get it?
The sooner the better.
Like somebody in their 30s, 40s, 50s?
And anybody in any of those age ranges, yes, but you use the word supposed to get long-term care.
Right.
It's not necessarily you go out and buy a long-term care plan, but you need to create a plan for long-term care. How could I fund it? So there are a lot of ways to do that, and we sit down with people all the time to walk through that and help them build a plan so that they know and they have the peace of mind they can pay for their long-term health care.
But the other thing that they need to understand is this. A lot of people will come in here and say, well, I don't have to worry about that because Medicare is going to take care of me. Medicare does not take care of nursing home, home health care, things of that nature. So you got to have your own plan. Now, if you're talking about spending down all of your money so you can qualify for Medicaid, then that's a little different. But you have to get rid of all your assets in order to qualify for that, to be paid from the government.
Goodness.
And I'd tell anybody that's listening to this, that's really not a plan.
No.
Because if you do that spend down, the one thing you have to realize is you give away all control of your care. You aren't making your decisions.
Right.
Medicaid is making the decisions for you at that point. So while it's an option that's out there, it's not a very good one.
And that's what's scary because I would think you want the option or you want your kids to have the option to look at this nursing home or this facility or this right? You want to be able to look at everything.
Yeah, but you need to be careful because the kids are going to choose that. So you got to be careful how you treat your kids.
I knew that was coming. I knew, that's kind of scary too. Mom and Daddy listening.
But bringing up kids, a lot of times people will come in and say, I'm not even worried about long-term care because my kids are going to take care of me. Well, that's not a good strategy either. Putting the jokes aside is that, your kids more than likely are in the midst of their career.
Right.
They don't have the time for it, and they have their own family to take care of. So it's not fair for them to put the long-term care onto them. Maybe they don't even want to, so there's so many different things that are going to come into play. That's why you've got to formulate that plan to pay for long-term care.
And the other question is, are they qualified to do the things that you need to have done for your medical care? So that's the other thing you need to look at.
So many questions
Yep.
about long-term care. Okay, next question is from LaDonna in Fredericksburg. LaDonna says, how do I know if my emergency fund is enough? Yeah, because our emergency fund is probably not a tree that grows money, right?
No, there is
Not
no
my
such thing.
backyard.
I know.
So the biggest thing is you don't want to have but so much liquidity, access to cash in the bank. That's what the emergency fund is going to be about.
Okay.
So 3 to 6 months worth of expenses is kind of the rule of thumb, but I don't really like rules of thumb. It's going to be based off of, one, your spending habits, how diligent you are, and what you need to have in the bank. So keep in mind, you're still going to have liquidity with other assets. But as far as swiping a card or going to an institution and just pulling the money straight out, that's what you got to focus in on.
And that's one thing that we do in the road mapping process. It's one of the most important questions we ask. What's your ideal emergency fund? We walk through with clients, why is this number, why is it 50,000? Why is it 100,000? Why is it $1 million? And we work from there to ensure that in their plan, they have their emergency fund that they can get access to should somebody need a new roof or a new HVAC system, things of that nature.
All right, well, we are about out of time, but Tim, why don't you close us out here?
Yeah, so the first 10 callers who have saved $250,000 or more for retirement, we'd like for you to call the number on the screen, 833-897-4845. We'd like to personally invite you into the office where we will create the very own retirement plan just for you. And the best part is, Cheryl will do it on a complimentary basis.
All right, Tim, thank you so much. Well, this wraps up today's show. Thank you for joining us today on Aspire to Retire. Next time, we will discuss how to better understand the stock market. Ooh, if you'd like some advice, call us now. Once again, 833-897-4845, or scan that QR code on the bottom of the screen to schedule an appointment. Your questions could be featured on our next episode. On behalf of all of us at Aspire to Retire, I am your host, Cheryl Nelson. Have a great day.